Alright, what's up, guys? I'm gonna talk about a new pattern that really has probably been my most profitable pattern of this year. It's something that I've been developing, and it's only somewhat recently that I've kind of put a lot of the elements together of why this type of short pattern might work, right? So I think like many people, when I started shorting, I just started shorting. If you look at my early videos, like clear outs and fake breakouts. You get a big fake breakout, I would anticipate it. Short it, you would get a big red candle. It'd have some type of flat top, uh, and sometimes it would go down, and sometimes it wouldn't, right? But on the shorts that didn't do that, there's a lot of shorts where I was waiting for certain levels to get broken, right? Waiting for certain levels, like if I on Wii here, if I saw a flat top, right? I'd wait for this bounce to come up to that top and hopefully do some type of fake breakout and fade, right? Some type of very obvious short pattern. And there's so many times I waited for something like that and it never came. I'm like, man, it's like this bounce got really close, but um, it didn't quite get there. It's like, and then you get a big 20%, 30% fade. I'd be like, why did I not? Why didn't I see that, right? And I would try to short some type of like support crack like this and make a little bit of money on that, but overall, um, I never knew why. I was like, why did that pattern, why didn't I get the pattern that I wanted, right? And I was like, well, what about shorting these bounces? Like, what about these bounces that get really close to, it could be intraday high day, it could be pre-market high day, but don't quite get there. I was like, what about those? And I tried trading those over the past couple years, and I'm like, man, which ones worked, which ones didn't work, and I'd make some money on some of them, lose some money on some of them, and essentially what I was doing is I was shorting these pops and risking whatever the high the pop was going to, right? I was like, okay, and then finally, after enough time, uh, sometime this year, it started really clicking what type of kind of liquidity thesis I needed to have for shorting these pops to work, right? And a lot of that is dependent on how market makers target liquidity, right? So the stock market is really a game of especially in these highly volatile low flows or these penny bankrupt names, anything where just like insane volatility, insane range, insane volume. Market makers are going to paint stocks, are going to move stocks to make money. There's so much money to be made. Uh, you know, uh, Squeezing shorts, trapping longs, moving a stock up and down, creating very abnormal price action. There's a lot of money to be made um, for market makers, probably using very highly sophisticated algos to like to paint things, to move charts in certain ways. Um, and a lot of that is, if you think of it from a market maker perspective, they need to make money from retail liquidity, right? They need other people's money to make money, right? If someone's going to manipulate stock and move stock, they need other people's money to make money, right? Because you need other buyers, right? If you're going to pump a stock, you need to dump into other buyers who are buying the stock higher than what you bought it for, right? Um, so this pattern is essentially studying one of the most common long patterns that retail uses and understanding how retail longs. See, by the way, there are retail longs in small caps and micro caps and low floats that make millions a year consistently every single year who only go long and never short, right? If you're a part of short small cap FinTwit, it's very easy to get tunnel visioned on the short side, right? All the edge is on the short side. People don't make a lot of money in the long side. Absolutely not true at all. And these guys are really smart, really, really smart. That they're buying deep dips. They're not buying breakouts. They're buying deep dips, and they're uh, essentially trading Momo on common moving averages that market makers use to move a stock, right? So, and a very common pattern, long pattern that any retail long is going to learn is a 5-minute flag, right? So we're going to talk about 5-minute flags. We're going to talk about how longs are positioning themselves because if you're going to short long traps, you have to know what a long pattern is, right? You have to know where they're getting in. You have to know what longs are expecting, Yeah, and you have to know where they're planning on taking their profits and what levels they're risking and how they're reading the chart, right? Um, and again, market makers abuse retail positioning and abuse specific price action to draw retail longs in. Um, and also scare off shorts. You know, a lot of these moves are hyper aggressive moves. Shorts going to be afraid, right? Especially if they already got squeezed earlier, they're not going to want to reshort something that looks insanely strong. They're going to look for some like obvious sign of weakness, right? So this is a huge, huge risk reward pattern if you read it correctly, if you generate the right type of liquidity thesis, right? So I have a lot of examples. These are all from like the past 2 weeks. I probably have, I mean, I found like, what, 10, 11 examples. I'll show you ones that didn't work. I'll show you ones that did. You know, I'm not saying pattern always works, but um, essentially, we'll go over here. Um, it's a fake 5 minute flag. So the 5 minute flag is on the 5 minute 9 EMA, which if you use the 1 minute chart, the 1 minute 50 EMA is roughly equal to the 5 minute 9, right? So we'll see examples. I'll have the 1 minute chart open. I'll switch between the 1 and 5. But after up only, this is the most important criteria. A stock has to go up only first, and the reason it has to go up only is because you need to squeeze early shorts. You need to squeeze shorts who are trying to get in really early because they think stock's extended, whatever, showing weakness, whatever, and they're usually shorting at a key level. The play usually seems to be working, right? It seems like the trade's going your way. Stock reverses, shorts get squeezed, and it causes stock to go up only. And up only usually means like on the 1 minute chart, this is the 9 EMA, my purple line. It just goes up the 1 minute 9 EMA. This is the best one, just goes straight up the 1 minute 9. It just keeps going up, bounces off, it goes up, bounce. Up only is good. Up only is really, really, really good because it squeezes shorts. Also, from a retail long perspective, retail longs start thinking the stock is strong. I mean, how could you not? If the stock goes up only, stock must be strong, right? If there's big volume and you just see the most insane tape of your life, and it's just here's we from yesterday, uh, August 11th, you know, deep dump. Straight up, man. Straight up with 8 million shares. I mean, it's a 25-cent stock, but 8 million shares per minute straight up. Okay? Anyone looking at that's going to think that's strong, right? Longs are going to want to get in on the dip, right? They're going to want to see a pattern. And especially longs feeling FOMO from not getting in on the up. If you're not smart enough, some longs are definitely smart enough to long this dip and go and get in really early at market open. But if the pattern presents itself, but a lot of them aren't. A lot of them are not getting in on the up only move, and they're going to want to be waiting for a setup, waiting for a 5 minute flag, waiting for support to hold at levels they're expecting it to hold, and initiation off those levels. Like they're gonna want to get in when they see that, right? Um, so we'll see a lot of examples of this. Here's a bunch of stuff. The more longs and less shorts in a stock, the weaker it is. If all retail shorts got squeezed and all retail longs are in, who is left to buy? Very true. Who's left to buy? If every short got squeezed and every retail long super bullish, who's in the stock doesn't keep going, who's left to buy? Who's gonna buy? Nobody. Okay. Uh, longs. Okay, so this is about longs expectations, right? Okay, here's the basic pattern. In the pre-market on we, 0.24 right here, painted flat top level, touches it, comes close, touches it, seems really weak. Touches it here right before market open, cracks. I mean, this is dumped at market open. Seems really weak, right? So a lot of shorts, that's a key short level, right? If they're thinking, oh, this is a bankrupt piece of shit. I mean, look, especially with this, context matters. Context always matters, okay? Matters a lot. It's not just moving averages. It's not just volume. Context is really important, okay? Big squeeze, down only. Shorts see down only, they think, this stock's toast. Long see down only, and they think, I'm not going to long this. It's so bottomed out, man. Look how like the pump was yesterday. Why would I long it here? So in the pre-market, this is a case of shorts being really aggressive, longs being afraid because if any long try to buy this dip, at these levels, they just got annihilated the day before. They think, initially they'll think the pump's over, right? And it's that imbalance that less long thinks it's weak, short think it's weak, that causes the squeeze. That's what causes the squeeze. Okay, they're targeting market makers are targeting backside liquidity because they know longs aren't going to want to get in and shorts are going to pile up, right? So they squeeze it, right? The stock market is essentially very simple. There's an order book and there's a tape. The less orders selling on the way up, the higher the stock goes, right? You don't want retail longs bowling up right here because they're gonna push this down, taking profits. You want less longs on a stock if you're a market maker. If you're gonna want to squeeze a stock really high, right? So what they're gonna do is they're gonna paint a chart. They're gonna use retail psychology. Oh, this is weak. Oh, this level is getting rejected. That's weak. Scare off the longs, do a deep dip at market open, shake out any ones that might have tried to buy. A lot of times you'll see like a little push, a deep dip, and then another push, right? Like they're trying to do, they'll do like multiple little shakeouts all in that first like 30, 40, 50 seconds and then squeeze. Okay. Goes up only, squeezes key levels. This is a key level. But the thing is, this is a massive pump. That started from 12 cents and went to 32. I mean, there's got to be overhead resistance from the day before, right? So you do have overhead resistance, but also you have early shorts who might be feeling FOMO from this, missing out on this move, getting squeezed early, right? So you could generate some type of thesis. Stock goes up only, pulls back. This is the 1 minute 50 EMA, same as the 5 minute 9. Okay, 5 minute 9, purple line right here. It's a 5 minute flag. Longs love pullbacks like this. They love pullbacks right to their moving average of choice, and then big support, big soak. They love that. They love to buy these dips, man. The smart ones, at least. Retail is the dumb ones are trying to buy up here, but the smart ones are buying down here. But I have a lot of friends who make hundreds of thousands, and some are even seven-figure long traders who will buy 5 minute flags down on these dips, man. They'll get 0.238, 0.24 averages on these dips because this is exactly the type of price action we're looking for. But the thing is, not only is there overhead resistance from yesterday, but you had an up-only move. So a market maker, in order to make this move happen, a market maker has to buy a massive amount of shares, right? They have to buy so many shares, so they need to sell those shares on the backside, and they want to sell it on the highest price, right? They're not just going to dump straight down. Like, you might see a weak intraday pump on a couple 100,000 shares of volume go straight up, straight down, but on something trading 8 million, 4 million, 5 million, 6 million per minute, dude, there's so much liquidity, there's so much participation from longs and shorts. What you'll see on these and this type of pattern works very well on higher volume plays. Because you'll almost always have support at key levels on very high volume pumps and high volume pushes, right? So comes down, bounces off the 5 minute 9, 1 minute 50, big initiation. Now, what I like to see is previous lower highs on the 1 minute get broken, right? So I notice I'm a big tape reader. If you're watching a tape at these levels, there was a hidden seller at 2.6. 0.26. So big hidden seller right here. Refused to let this up, right? And a lot of times, when a stock's what I call in the range, like this is the range, this is the top of the range, this is like the bottom of the range because of this. When a stock's in the range and you see hidden buyers and hidden sellers, a lot of times it's a market maker painting a chart, right? They're trying to paint certain levels. So it initially seems weak, and if those levels get broken, it initially seems strong, right? So when I saw this dip off the 5 minute flag, I'm like 0.26 is a key level. So the way this short works is you want to see up only squeeze past key short levels, you want to see the pullback, and you want to see key lower highs get taken out. And the closer, believe it or not, the closer it gets to high day, the better the short is. The more aggressive the initiation, the better the short is. The more up only bounce off of key support levels, the better the short. So shorting volatility and shorting low flow patterns is very counterintuitive. Okay, aggressive moves are weak. Slow, grindy moves that take their time are super strong. You don't want slow, grindy moves. You want aggressive, insane initiation um, off of support towards key levels, right? That's what you want to see. You want to see the volatility. You want to see. So a lot of making money as a short seller is training your brain to see overly aggressive moves off of support levels and thinking it's weak. You have to think it's weak. This is weak. You see up only green off of support, and maybe you're the type of short who got squeezed on this type of move over here in the morning at market open. Um, a lot of shorts gonna be afraid to hit this. You got to train yourself. I'll show you many charts. You got to train yourself to see the most insane candles and be like, "That's weak. That's weak. It's a weak candle. It's weak candle." It's like I don't believe that's gonna work. um, okay, so longs, long and off the key MAs are expecting a breakout of high day. They're always expecting that because they know when high day gets squeezed, all these shorts piling in here, they're all their stop losses going to get triggered and it's going to go to point 0.3 and whatever. That's what they're thinking. So the way the trap works is that it doesn't break high a day. Okay, so when I short these bounces, I wait for the up only push. I wait for the pullback. This actually wasn't that bad, but let's focus on this pattern first. Wait for the pullback off the 5-minute flag. I wait for key lower highs to get taken out, and I short above that. You want to short. You want your average to be above 0.26. You want your average to be here, and what you can do is, as I say here, you can read the level 2 on the ask. So once key lower highs get broken, when I see like 0.26 get broken here, I start reading the tape. I just read the tape and I read the ask on the level 2. And if I see it hit a key level, see this is look at this, 0.265 high, 0.265, 0.265, 0.265, 0.264, and that's the end of that's the beginning of the down. What they'll often do on these long trap initiations is they'll put hidden sellers at certain whatever level they pick. Um, they'll break whatever level they painted. They'll get above it, and then there'll just be a hidden seller, or the buying just slows down. Man, it gets there. It seems super aggressive, and the buying it's just like it's trading 2 million, 2 million, 2 million, 2 million, and this just cannot move. Right? Love to see that. Love to see a hidden seller show up on a very obvious long pattern, right? And if you time it right, and this doesn't always happen, but if you time it right, a lot of times it does. I'd probably say, I don't know, 60, 70% of the time, the top where that hidden seller is will never get broken. What will often happen is so you short into 0.26s, it falls down, and you want to see volume get lower, and most of the time it will never come back up to that level. And as long as it doesn't come back up to that level, um, and in the volume, and it's just like and you just start seeing selling on the tape. You just start seeing selling, 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 selling. And what's funny is on the support, they also they always they'll draw trend lines like this, and they'll try to make it seem like that trend line is like important, right? It's lower high, lower high. Sorry, higher low, higher low, higher low. Oh, big initiation. Screw you, initiation. Like screw you, man. Like they're just trying to they're trying to bait so many longs on these dips. Dip, dip, this dip up, then the dump. Like they're just baiting, 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 dump. So this is great. This is exactly what you want to see on this type of long trap. So very simple. Very simple. Shorts get squeezed. It comes down. It flags. It pushes close to high day, usually past the lower highs. It stalls. You short the stall. Okay? And then usually what I risk is I actually just risk right where high day is because the idea of the long trap is that it's not going to break it. Okay? So my thesis is market makers trapping longs on a common long pattern. They're not going to break high day. So I'm going to risk high day. Very simple. And look at that. You can short 0.26, risk 0.275. Let's say your risk is 0.015. And then look at this fade. This faded almost 0.8. I mean, you'd have to be a genius to, cover bottom tick. But even if you covered even if your average was uh, you know, point, let's just say it was 0.21. That's, what is that? 45 cents. 0.45. What? Goddamn. It's fucking pennies, dude. 0.045 um, profit, and you're risking 0.15, so 0.015, so 3R or whatever, or maybe you held more, but it's a great trade. It's a great setup. Funny enough, we did this same setup the day before. Let's go to the day before. The exact same setup. Up only. Literally up only. The more up only, the better. Okay? A lot of shorts talk about not having good win rates, shorting midday, and stuff like that. Uh, that's because a lot of shorts don't understand how longs are positioning themselves. They're just trying to predict the top. They're trying to predict weakness on these tops, and it doesn't work. So, okay, crazy, bottomed out. Let's look at this. It's a bottomed out bankruptcy stock, right? It's going bankrupt. Does an up only move? Okay, pulls back. 1 minute 50, 5 minute 9, right here. Oh my god, dude, it keeps going back to, okay, right here. Longs buying this dip, because look at the volume, man. It comes down, it comes to their MA. Look at this initiation. This is what I mean. See this initiation? It comes right where their MA is, right where they want to dip by, and they get 5.4 million shares of confirmation up, up, up. This is very weak. This is very weak. You got to train yourself to be very weak. Now, I did see a hidden seller around 0.296, 0.297 right here. You could short into that. Sometimes because you never know. Like, okay, well, 0.3 is nice. 0.3 is a nice level because it's a, retail psychological level, right? But sometimes you don't quite know how far they're going to push these traps, right? But I'm expecting it. In this case, there was a hidden seller, which is why it was stalling right here. Then they swiped 0.3, which is like, okay, well, even if you're short here, you're risking near highs, and then the 0.3 stuffs. And again, if you're watching the ask when 0.3 got broken, a ton of buying initially comes in. Buying slows down, and the ask will not move. And this is the top. This candle is the top of this fade. This is like where the real fade begins. Instead of trying to guess high day, because guessing high day on super strong stocks trading insane volume is really foolish. It's much easier on strong stocks going up only with big volume to guess the bounces that are going to fail rather than trying to guess where high day is going to be. Because, how many times could you have got burned on the way up, right? How many times? Like, if you're trying to guess one of these candles is going to be high day, you know what I mean? Like, how many times are you going to get burned, Just wait for the pullback. Wait for the flag. Retail's going to buy. Wait for the initiation. It looks really aggressive. Train your brain to think this is weak, okay? And short at key levels. 0.3 was a good key level to short. Could have shorted a little bit lower if you wanted to, but it's up to you, okay? Also, by the way, strong stocks. Strong stocks will often give big aggressive bounces. Aggressive bounces off of support are weak. This is weak. This whole thing's weak, okay? This is weak. This is weak. See all this aggressive buying? It's weak. It's super weak. Okay, and we'll see other examples of this. Here's ATNF. Annoyingly, ATNF did this at like 5 in the morning. Same thing though. You see this in low floats a lot. Up only to pre-market. 5-minute flag. Okay. Pulls back to the 5-minute 9 EMA. And again, since high days have 1.64, I would at least pick 1.5 to get broken. You definitely want, the closer it gets to high day, the better the short is. Look at this. Paints 1.5. Big initiation. Oh my god, it's so strong. You short at the top of this candle. You read the tape, you see the ask stall, and you short at the top of these candles, and you risk high day, right? Up only, 5-minute flag, big initiation past key levels, 0.15. You could get a 0.155, 0.154 average. And then if you timed it right, it will almost top immediately. You get the low volume pullback, and then a deep fade, right? This would have been way better if it happened after 7 o'clock, because I don't wake up to trade this early. Pretty much because I don't do that. But more examples. Grr. This is guys. This pattern happens. I'm not even joking. Like probably at least even if the market's slower, like 2 or 3 times a week. Sometimes even more. Okay. Grr. Backside bounce. All right. Okay. Backside bounce. Pushes pre-market. Pushes pre-market. Right. Kind of paints this $2 level. Oh, $2 resistance. Pushes $2 here. $2 resistance. Oh my goodness. Look at $2. $2 resistance gets squeezed. Up only past a key level. Shorts are going to want to short at $2 because rejected it here, rejected it here, rejected it here. Deep. Look at it. Look how, you know how many shorts are chasing this pullback? Look at that. It just comes up right to 2 and then just insta dumps, right? And then you get 1 minute 9 up only. Squeeze the shorts, right? And then here it is again. 1 minute 50, 5-minute 9. It's like a 5-minute chart. Wow, look at a 5-minute flag. Looks real strong. I'm going to be full disclosure. I was actually long this because I thought GER would actually push more. I thought it would give a bigger backside bounce than this. This is an example of me being long. I was actually long at 1.86 on this push because I expected the GER. I expected a backside move to squeeze shorts. I longed this flag right here. I longed this push right here. And I thought it would keep squeezing because sometimes it does. We'll see this pattern not work. It doesn't always work. Okay. But here's something that's really nice. Okay, comes down, bounces right off the MA, pushes, forms a flat top. See this flat top of 2.15? I actually love flat tops because longs love to buy 1-minute flags. This is called a 1-minute flag. See this flat top? It's essentially a fake breakout. It's a fake breakout. You up only, you bounce off the 5-minute MA, and then you get a flat top 1-minute flag fake breakout. I love to short these candles. These candles, if I was bearish biases, sadly I was bullish, but with a good average. But if I was bearish, I'd wait for this flat top to form, and then I would short in a 2.18s, and I would risk high day, right? In this case, this is an example. Usually, if this trap works, it pulls back, volume gets low, and it fades. Sometimes you get a second push, but as long as the second push doesn't break high day, the pattern is still valid. So if you're short this candle and you're risking high day, it comes back, it soaks on the same 5-minute 9 EMA, 1-minute 50 EMA, pushes again, and when I was long, I'm like, this move has to go. This move has to go. This is a do or die candle. And it died. But yeah, this is a good example of they faked out longs twice, man. They soaked on the 5-minute flag. They pushed it, stuffed again. And what's great about these long traps is that if you are right, you'll get the most immediate fades of your life, man. Like the most stress-free trades you will ever have is not trying to predict high day, because often you have to, hold through a bunch of BS. It's predicting the long trap after high day that doesn't work. It's the long pattern that doesn't work. That's when the MMs finally start dumping. That is when all the buyers have bought in, all shorts have been squeezed. That's when they start dumping. Okay, and then that's why these moves. So look at this aggressive selling. This was just like 45 minutes of non-stop selling. More examples. BRU. I shorted this. Up only. Okay. This was interesting because it did pattern replication. I know this seems like the beginning of the move, but this is actually 100% up on the day. This was 100% pop. did a fake breakout, and it immediately squeezed. And then it did another big exhaustion candle, immediately squeezed again, and then I saw a bunch of stalling on the tape in the 2.4s, and I shorted this candle at 2.39 because I thought, well, they're just repeating the same pattern back to back. And if you see my pattern replication video, you'd understand why I think this is bearish. And luckily, I held through this candle. This candle, I was going to hold through a little bit above 2.5 because the range was so big. But luckily, hidden seller was right at high day, and it dumped. Like, cool, pattern replication. But now I know when you get big volume, a lot of times big consistent volume will find support. Okay, where does it find support? Well, the first time it found support was on the 1 minute 20. Volume got low, big relative volume compared to the pullback. It got real low, and then it went from 1.79 to 2.07 in about 30 seconds. That's what happened. And then it pushed. Again, you got to train your brain to think. Aggressive pushes off of support are weak. You got to train your brain to think that way. But so I shorted this. I shorted this candle. But my overall thinking was, you know what? There's so much volume in this, and for the pre-market, there's so much volume in this that they'll probably set up a flag. They'll probably set up a fake flag, and I like that this 2.2 level was here because it makes a very nice level for this pattern. This is the exact pattern I was looking at. And look what happened. VWAP and the 5-minute 9, dude. Both of them. Confluence, man. Long, so bullish, man. Look at this. Longs love these like low volume pullbacks and these big aggressive initiate. They love this is how longs think. They see a big push, they see a low volume pullback right to the support level they love, and then they love to see initiation. They long the initiation. That's what they do. Okay, what are they thinking? This is gonna go straight past 2.5 and go up only, right? What does it do? Goes to 2.2 again. Okay, so now that's another lower high, right at 2.2. So now that becomes the key level. If that level gets broken, it is the key liquidity level where it'll either continue or where the market makers will pull the trap, right? They'll trap the longs. So okay, comes up, comes up, comes up, higher lows, higher lows are bearish. Higher lows are bearish, guys. After up only squeezes, I love to see higher lows. Again, I'll show you some examples that didn't work, but I'd love to see higher lows because higher lows mean any long that's trying to buy these dips is in the money. Any long buying off VWAP in the money, buying this initiation in the money, buying this dip in the money, buying this in the money. Like they're all in the money. They're just like they're buying a dip and the trade is working. Right? It's a great day. Be along. What happens, man? 2.2 gets broken. Market makers slam it. This is and then what? Low volume and it starts pulling back. And I was telling my friends in Discord, I was like, if this long trap's go to work, market open will be super heavy. It'll be super heavy, and this level won't get broken. Like this 2.3 level is not going to get broken. And look, this is classic MMs, man. This is classic MMs. They dip it, they rip it into an unhalt, and because it's close but below 0.75, the uphalt level is very tight. It's usually 10%, right? So it's very easy to uphalt a stock, right? When the halt bands are super tight, they uphalt it. It looks so strong. What do? They dump it, and then if you saw my Twitter, it turns out company insiders dumped 8 million shares on this day. So isn't that funny? Company insiders hire some market maker to manipulate a stock. They manipulate it in the pre-market, abusing pre-market liquidity, and then they dump all their shares in the market open. And this is what dumping 8 million shares looks like. I sadly was like, I was taking some covers, on like the 1 minute 200 and stuff like that, like all these levels that I thought were gonna like at least hold and maybe give a secondary pattern. No, I didn't. Well, it's not like I knew company insiders were gonna be dumping. But again, up only, 5-minute flag, painted lower highs, breaks the lower highs, gets slammed. big volume on a long trap. I fade a market open, right? I think didn't Gurr do this another time? Yes, I did. This day. I shorted this. It's the best short of the day. Okay, backside short. Up only. Okay. Now, you could have big brained it and shorted this candle, but if you didn't do that, it pulled back to the 5-minute 9. Okay. Bounces once. And it's up to you, man. I would have personally liked to see this bounce go farther towards 3.2, so I didn't get it on this candle. I didn't get on this bounce. And it pulled back again. I was like, well, sometimes, again, this is kind of the art of short selling is waiting for uh, ideal setups and not getting in too early. It's the hardest thing. It's the hardest thing not to you see the bounce off to 5-minute 9, you see the initiation, and you start shorting down here, right? And it's a, but I don't like my high. I don't like my risk being that far away from high day. I like something close. Either like something closer, or I like something that's so extremely bullish that if it doesn't work, it's the perfect trap. So, and this is what I mean by that. So, bounces once off the 5-minute 9 EMA. All right, low volume pullback, low volume pullback, cracks V. Look at this. Look at this volume down here. Let me just show only the pre-market volume. Volume gets really, really, really low. Cracks VWAP, huge initiation. Again, you have to train your brain, especially after an up-only move. And Gurr has a lot of bag holders to think. And also the market in July, and for the most part, there's definitely a few squeezers, but it wasn't that insane strength we saw back in April and early May. Not it's a good market for pre-market pumps and dumps. It definitely is. So market conditions definitely matter. So I like that there was this lower high here, 0.313 from here. Big initiation, breaks 0.313. I shorted right away. I had something maybe like a 0.312 average or something like that. Pulls back, gave another push, but again, since my risk is up here in the 320s, sometimes it's hard to know the exact candle that the long trap's going to top out on, but so I usually just wait for key levels to get broken and then I just read the tape. And if I see some stalling, I like to short it, right? Okay, short it, and I thought they would pull it before market open, so I was like, oh man, I hope market open doesn't squeeze me, and I'm hoping they don't do like a quick swipe and then dump, and like I'm already positioned down here, and luckily it went straight down. Again, if a long trap is going to work off of key levels, market open is usually very heavy, right? Just like we saw with that other play, BURU, right? Super heavy, down only, right? Literally down only. Reach my target level before 10 a.m. Best short of the day. Let's pick one that didn't work. Yell. And a lot of times I find that a lot of these times where it doesn't work, there's always some kind of external factor that you don't quite catch, right? In this case was some bankruptcy meme runner name, but hey, this is the reason I want to show you this chart, because I'm going to show you the importance of waiting for key levels to get broken, because you want your average above those key levels, so if the pattern does not work, you're not taking massive losses, right? So, Yell. This was day 2 from 0.6, day 2 up only to 3.3, and I'm like, wow, insane bankruptcy name, right? It's absolutely insane. Pullback, 5-minute flag. But I didn't short this bounce, because this is below 3, and the high day's at 3.3. I don't like my risk being that far away. But I like that level. I like 0.3. I like the $3 level, $3 level. Bounces off the 5-minute 9 again. Big initiation. and I got short above 3, right? And then it came back, it pushed, it stalled again, it started to roll over. Volume started to get really weak. And I'm like, great, this pattern's working, man. Up only, fake 5-minute flag. I have a good average. Um, it gets really thin, holding support, initiates again. I'm like, well, sometimes they like to initiate a second time, and I'm just gonna keep my risks. This is crazy. At this point, it's up what, like 250% or something, like 300%. It's up like a massive amount from. Oh no, it's up like 400-500%. Yeah, so. I mean, it's obviously extended. I got in what I thought was a good pattern. It comes up, rejects it again, and I actually get the VWAP crack, and I got like one cover. I obviously wanted to cover below, 2.5 here, but I saw the soak. I just covered a tiny bit, um, and I thought, and then it pushed and pulled back on low volume again. I'm like, was that a long trap? Is it just gonna roll over and die? And nope, curls up, gets real tight, squeezes me, and I got squeezed on the rest of my position. And you know, and that's why you want averages. You want averages above here. You want averages at like 310. You don't want to be chasing cracks and having an average at 2.8 and you know and getting. And, oh, by the way, on really strong stocks, I never short high day right here. Like this high day, it broke high day and pulled back. I consider high day clearouts on strong stocks to be strong. It didn't even surprise me when when the pattern happened again here, right? Then one up only, and then one more up only, and I didn't see any of my patterns up here, so I didn't take any of those trades. BFRG, another example of it not working. Okay. So this is a AI name, right? From a previous pump AI name. My TOS is going kind of slow from the day it did this thing. So AI name, just up only, and here's that 5-minute flag VWAP, just like we saw um, on that GUR example. GUR, GRRR, I call it GUR by the way, GRRR. And I saw this, and I saw, okay, what's the lower high? 0.526 from here, and 0.53, like a push above that. So it got to 0.526. It then did a big initiation right here, and I got short in the 530s again. This is why I'm waiting for key lower highs that are just below high day to get broken. And it was stalling here. It was actually stalling at 0.537, 0.536, and I got short in the 530s, and then it soaked, and I just got out on this candle for like a two. I think I lost 2% on this play, right? Because I'm risking that high day. I'm like, well, that didn't work. And then I big brain shorted this candle in the 5.6s. That's a different pattern though. That's just manipulated stuff. Femi, more penny names. Again, these are all from past like late July, early August. Like I can go back and find a lot more examples from this year. These are just the more obvious ones. So okay, penny name, fake selling. They sell off, they sell off, they sell off, and then they squeeze. You'd love to see early shorts get squeezed, right? And when I see big squeezes like this, I usually just watch a 1 minute 9, and I wait for the 1 minute 9 to see if it soaks and continues. And if it does, I just like on if we go back to Yell from that one day, I just watch a 1 minute 9. As long as this is holding, I don't press any of my short buttons. If I see big volume and stuff that's going straight up, I just watch this EMA and I wait for it to get broken. But anyways, back to Femi. How long is this video, man? 40. Oh my god. Okay. Shout out to anyone who lasted this long. Okay. Early shorts get squeezed. This is early shorts getting squeezed. All right. Early shorts got squeezed, got squeezed, got squeezed. Um, and here's an example where I'm always trying to find out, because if you look at the 5 minute, it's soaked right on the 5 minute 9 after the up only squeeze here. And this would be an example of, I see this 0.9 level. I'd want to see this 0.9 level show a lot of heaviness, right? And sometimes, hey, if you're going to take a trade here, um, and sometimes you're going to read the ask and you're just going to see the key ask levels get broken. Like, for example, it just goes 0.9, 0.91, 0.92, 0.93. Like this ask was so strong that that's why a lot of times I'm reading the level 2. Sometimes reading level 2 on the ask, once it does this 5 minute flag trap, can really save you. But it's an art, it's a skill. I highly recommend recording your screen. Something I always said to do. When I record my screen and go back at my recordings, I'm just looking at key levels, right? I'm waiting for these patterns that I made money on, and I'm waiting for key levels like 0.9 to get broken, and then I just watch the tape from here to here. I just go back and I watch that tape, and I'm like, what? Why was this so strong? Um, if I took a trade and lost, like should I have avoided it? Can I improve my tape reading in some way to avoid these like kind of squeezes where my pattern doesn't work? That type of thing. But so pattern didn't work here. 5 minute 9 again. Big initiation, breaks 0.1, insane volume. This is why it stalls, because it's a long trap, right? And then that was the big fade, big manipulated push, aggressive push long trap, and big fade again. So anyway, I think this video has gone on long enough. That is the pattern. Hope it makes sense, and yeah, keep an eye out for it. I highly recommend using these MAs. 1 minute 50, 5 minute 9, and trying it out. See you.